Welcome. Welcome, everyone. I'm Angelo Robles, and welcome to @FamilyOffice. And for my members of SFO Continuity, as always, a special welcome. We have very much an impromptu program today, not only with one incredible guest, but with two. And when I mean impromptu, this all came together within the last hour. So this is going to be a lot of fun. Now, there's a little bit of context behind this. I'm traveling to LA this weekend here in early May to the Milken Conference. And I'm going to be hosting some member programs Sunday through Wednesday, private home parties, an amazing luncheon, a program at something called Uncorrelated Beverly Hills, and other programs I'm hosting. If you're not a member and you're a family or family office, what are you waiting for? This has never been a more interesting time in the world, and the collaboration with incredible peers and insight is incredibly valuable. But let's get on to the program today. I'm going to call this one Power, Gold, Sovereignty. And really, it's investing in an unstable world. It's going to be a deep dive with Mark Attanasio and David Robb. So what I'm going to do, we're going to do this a little differently, partially because it's so impromptu. A little bit of context to David. David is managing director of the Frontier Group, a single family office, and a serial entrepreneur. Mark Attanasio is co-founder and managing partner at Crescent Capital Group. Oh, and just happens to be chairman and principal owner of the Milwaukee Brewers, MLB baseball. David, why don't I start with you? Because I think in this conversation, having a 1-minute context of you and then Mark, before I get to the questions, would be helpful to the audience. David, if you don't mind.
Great. Thank you for doing this, Angelo. You do a good job curating these things, by the way, and the events coming up. I'm looking forward to attending during the Milken Conference. And I want to start by saying, go Brewers. Okay.
All right.
Anyway, my background, I got my start at the Carlyle Group when it was a relatively small firm. We had, a couple $100 million of capital under management when I joined, and when we left, we had, I think, $30-40 billion. So I was there during kind of a critical growth phase. I was mentored by a fellow named Frank Carlucci, who was the chairman and one of the early guys at Carlyle. And he had a nice little job called U.S. Secretary of Defense before he ran Carlyle. And he took a personal interest in me and mentored me. And then when it was time to leave Carlyle, he joined me and we set up Frontier Group, which is the family office that I currently manage. I've been pretty lucky in the career. I've had God's put in my place literally 4 unicorns for me to come along, and using the baseball analogy, smack a home run. And they were basically technology companies. And so technology has been an area that I've done better in than other areas. Healthcare is where I'm pivoting a lot of the family office time more recently. We own one of the largest mental health care operations in the state of California, called Everwell. And we also are deep in AI. We have a company that trains the Top Gun pilots for the Navy, as well as the F-35 pilots for the Air Force, called iPerformix. And we're also now getting very active in pivoting the AI gun, as it were, into healthcare, particularly early detection of diseases, focusing first of all on cancer. And so that's what I'm doing lately in a nutshell. Very still technology oriented, little heavy weight towards private directs, but a little bit of public market investing as well.
Excellent. Mark?
Yeah, David and I have known each other for a long time and intersected over the years, and most recently in this idea around AI and early cancer detection. I worked as an attorney, Angela, for a couple of years, found my way to California, I think to do something different. And I joined Drexel Burnham when it was someone, the junk bond market, now known as the high yield market, was someone in its infancy. Within a year of being there, and you'll hear in the story, I feel a little bit like Forrest Gump. Like what Mike Milken plucked me from the corporate finance department, where I just learned how to do leverage buyout modeling, and asked me to sit on the private placement desk. sitting on that desk and then capital markets for a couple of years, I recall having a party on the trading desk because the market hit 50 billion in size. It's now over $1 trillion. That was somewhat unimaginable. And it was unimaginable that, with some of the S&L crises and challenges that we had at the firm, that Drexel would go bankrupt. And I found myself with my wife now of 37 years, my son at the age of 2, and a mortgage without a job, and decided with a couple of partners to start Crescent Capital. We were fortunate that happened in 1991, because if we had done it in 1989, we would have failed like everyone else, but we've had some good luck. Crescent today is over 46 billion in assets, 3/4 of which is private. So a lot of what we do is mostly alternative credit, private lending, usually with a PE-backed company. We do have some public market, 10 billion or so capital and expertise for 30 some odd years. Crescent's gone through a number of iterations. God bless America, because I think we bought and sold ourselves 6 times. And on one of the sales, got enough money that when the Milwaukee Brewers came up for sale, I was able to participate in that and succeed. We actually at that point had an investment in a company called Nina Foundry that made #1 market share in manhole covers in the United States. I've been in Wisconsin, but through a variety of connections, found myself there. That's now been a 21-year experience. I'm on really every major committee in Major League Baseball, including I run the investment committee, and baseball makes a number of investments with over $1 billion now of owners' capital into mostly strategic sports things, but also somewhat in a endowment investment format. That path took me to gaining control of a UK soccer club called the Norwich City Canaries. I'm an investor with the Fenway, Steve Cohn and Arthur Blank as leads in the strategic sports group that invested in the PGA. It's very interesting. And I'm an executive committee member in LA 28, back to 2017, bringing the Olympics to Los Angeles. Head of the IOC asked me, why am I doing it, in Los Angeles and not in Milwaukee? I said, well, we raised our kids here, we live here. And if you want to have an Olympics in Milwaukee, we'll set that up, but unlikely. And then found my way. My dad passed away from small cell lung cancer in 2015, and he wanted to do more to give back to both UCLA and Stand Up to Cancer. And I came up with a venture philanthropy idea, which I found, probably should not have been to my surprise, had been done in cystic fibrosis and at the Wellcome Foundation. And we incubated a company at UCLA, 2 companies, one in joint venture with Caltech, one with the university itself, drug discovery, a lot of early, I'll say, success with our data and fundraise, and some of the things we'll talk about here. But, and now as a result of that, have approaches from 4 or 5 universities or charities to use a similar structure to bring people together. And a lot of what, at least I'll talk to you about today, since my last science class was AP biology and AP chemistry in high school. But I can talk about alignment of interest and the importance of developing alignment among, whether it's a charity or a university, investors and management team and constituents. And I've seen that that's worked, everywhere, whether it's at Crescent, it's in baseball, or it's in, in biotech.
And audience, we're going to get to all of that, I promise, from macro to public and private to healthcare to energy to commodities, definitely to sports. So I'm probably going to have to adapt my impromptu title that was off the top of my head. But the secondary part of that title, investing in an unstable world, is accurate. And maybe on more of the macro front, we'll have a chance to get to that. I'm lucky to have been in this community for 20 years, to know some incredible people like David and Mark. It's rare to get people of their prominence as principals to want to be part of a more public platform and program. So I'm very fortunate. And again, this is like 1 hour's work in terms of planning. It's impromptu, so a little bit less structured than some of the 2 or 3 hour interviews that I've done. Why don't we start a little broadly? So the word AI came up a couple of times. My audience knows I'm on the forefront of that in public and private markets as an allocator. I believe in it as a framework. And I'm hearing everyone talk. The current CEO of Google, it's going to be as impactful as fire and electricity. So many others, Ray Kurzweil, AGI by 2029, way smarter than any human, and that's going to go exponentially from there. I hear about that basically it's going to be the framework for everything. So I look at what's going to be impacted by AI as an allocator, and I'm thinking of healthcare. I'm thinking of energy because it needs more of it. Commodities and precious or critical metals that relate to that. And then even things like government and defense. So maybe starting a little bit with you, David, especially from the healthcare perspective, how are you looking at the big picture of AI and the impact on some of the sectors that I noted, which are all multi-trillion-dollar sectors in their own right?
Great. I'll try to tie some of those things together. From a macro perspective, looking down, it's clear that virtually every industry is scrambling to implement AI. I find financial services to be sort of leading edge industry, but I find healthcare to be a laggard. So because I've been very fortunate to come across some very, very smart people in AI that are currently working on some very sophisticated contracts for the US military, I thought that this would be a good way to bring that kind of intellectual capital to the healthcare industry. And I think also from a macro perspective, looking down at things, when you talked about macro, how to tie that into healthcare, if you think that, and I think there's sort of broad consensus with some uncertainty in the marketplace now, that we have a softening in the economy taking place. There's some data, emerging data indicating that this quarter. I think healthcare is generally a more defensible space to be. So that's another reason why I'm starting to focus a little more in there. I shouldn't say starting. We started about 10 years ago with our mental health care operation, but this is an area that I'm very concerned about. And then how it touches personally, my sister developed ovarian cancer, and it was a shock to everybody because she's a physician at a very high-powered Ivy League school. At least the affiliation was. She's recently retired, but she has access to great health care. And for someone like that to be surprised with ovarian cancer is a kind of a shock to our family. And so I decided that I really wanted to work on finding the very latest early detection technology out there with an AI overlay on it, and was able to find something out of Boston Scientific that tests human breath for cancer and other diseases, and got very excited about it. Spent a lot of time putting things together on it, starting to invest in it, and we have MD Anderson, was the largest cancer research center in the US, leading all of that work for us. So that looks pretty interesting. I wound up running into Mark again in this space because Mark has been working with one of the largest cancer advocacy groups in the US called Stand Up to Cancer. And they've been doing a lot of work in this for many, many years. And just this year, I guess this spring, their CEO is a very talented leader named Julian Adams, decided he would pivot the organization towards early detection of cancer. And I was happy to hear that, because my own little thesis was that looking at a macro perspective in the healthcare industry, there's a lot of money that's been invested in therapeutics. And we have pretty good technology right now around, as a country and as a world, really around treating cancer. But I think where we're really lagging is detection of cancer, and it's particularly early detection. Because if you detect cancer during stage 1, virtually, most forms of it, your chance of survival is over 90%. The problem we have, and in my opinion, and I think Julian Adams at Stand Up to Cancer, and Mark, I think, concurs, is that we're catching it too late. So if we can use the existing therapeutics in the market now, but apply it to people, we catch it in stage 1, we're going to have we're going to save millions of lives, even in this country alone. So I think that's a really noble cause, a good place to be. And that's why we're investing a lot of capital there. From a macro perspective, tying in some of those themes, I believe healthcare generally is more defensible right now. I think this is a more uncorrelated sort of investment, potentially being involved in early detection. I think does that tie in the themes you wanted us to tie in? I didn't tie in some of the commodities, but we can get into that later.
Well, it's of course, and Mark, I guess the same question for you. I'm going to add a little wrinkle to it, and I get it. None of us are scientists, at least per se, in our own minds. Maybe we are, but just this morning, it's hitting in my head. I heard Elon Musk state that within 3 years, robotics would be better than most surgeons. And he said, and he's notorious on being too quick on time. He said within 5 years, it'll be better than any surgeon. And I've heard multiple thought leaders, at least in longevity, probably most publicly prominent Brian Johnson, state that make it 10 more years. And I don't know if we're going to then die for a long, long time, barring accident. So this goes back to the world of AI, biotech, and healthcare. We'll push aside energy and commodities to the next series of questions. How do you see, as an investor, which all three of us are, in public and private markets, how should I be looking at my portfolio given what I just described?
So I think as an investor, one of the many things I learned from Mike, in the middle 80s, companies that were just concepts like cellular phones, we'll call it cellular, there were no, the thought of having the Las Vegas Strip turn into what it was, nobody could have understood. So it wasn't just technology, but even, bricks and mortar. You have to be open to new ideas. And Mike talked a lot in those days about human capital. And so whether we back Craig McCaw, Steve Wynn, or in the case of what I'm doing at UCLA, backing Dennis Slayman, or David mentioned with Stand Up to Cancer, Julian Adams, it starts with people. And I would, advance that even if we look to robotics, a lot of the top surgeons in the United States right now, I know both in orthopedics and otherwise, are using, robotic technology. And so the incisions are smaller, the procedures are shorter, and I think the results are generally, therefore, better. And so it makes sense that if you advance that at some point, you don't maybe need a doctor in the room. Now, I would say, are you going to be comfortable with that? I might not be, given, I'm a baby boomer, but, I still can't believe you see, cars driving around without drivers.
Waymo in California.
Now, if you're in one of these Waymo cars that I forgot which airport where it was, is spinning around for 20 minutes because the GPS is off. I don't know if you want your robotic surgery to be spinning around.
Mark, I've had some Uber drivers do some weird spin arounds too.
No kidding. And might also advance that. While computers are going to be able to think faster, think more complex, you still need humans to address that, and importantly, then I think the kind of thing we're doing here, maybe instead of IQ, EQ, or emotional intelligence is going to be more important, the ability to interrelate with each other. And as investors, I think that, especially for the kind of community that your group addresses, and I know what our family thinks about is, what do we want to do with our incredible good fortune in life? And generally people who are builders want to continue to build. So, it's not enough, I think, to just, there are some folks, and that's all good, to say, we'll just give it away. Sometimes you'll see that's generational, maybe down in the third generation, they realize it might be better stewards for their capital. But can you align interests and do some of these things that, the challenges, they all sound good, whether it's what we've talked about here, whether it's, every time I hear get a presentation on something in the sciences to cure cancer, it's something I'm interested in. Cancer touches all of us. Interestingly, what David's mentioning, or lead drug at Toral, which is a ADC, antibody drug conjugate company, has so far through the middle of phase 2 very good results for ovarian cancer, which my grandma passed away from. So David and I share that connection through something that's somewhat just, I guess, situational. So yes, do we have the same worries I think that everyone has, is will computers take us over? And there's some, I forgot who the big theorist is. There's some line of thinking that we're all actually an experiment for a different life form through a computer generated AI project. That's well beyond. I'm a simple money lender based on well beyond my.
Well, that's living in a simulation. And yes, there are more and
right.
more people starting to seriously actually go down that road. I don't know.
Yeah.
If I had to, let me build upon a little bit of that question kind of for both of you. It's a little bit of a deeper thinking perspective. If the comments that I said about longevity are true, and no question, the combination of AI, gene editing, CRISPR technologies, maybe I'm missing something. We are going to live longer. The whole thing about an $84 trillion plus wealth transfer, I think I'm not going to quite use the word in jeopardy. I don't think it's going to go as planned for that reason that I just described. If that is true, and I'm trying to bring this back to investing, if that is true, and even a wealthy person may live 20, 30 years longer than expected, what is going to be the impact on their portfolio? The old Wall Street 60-40 model, the only in public equities, all those things are going to be challenged in the decades to come. How should a qualified purchaser, a more sophisticated investor, look at these big picture trends in healthcare and longevity, and how should they be reallocating their portfolio?
David, you want to take a shot at that first?
Yeah, I'm happy to take a shot. I think that has implications through so many different asset classes. I mean, I'm thinking about real estate. I'm thinking about hospitality and the need to house people when they get older and things are more difficult physically for them to get around. I'm sure we'll have technologies to preserve the mind and make people more limber. But the kind of life extension that you're talking about, and that people like Pierre Diamandis is talking about,
sure,
are pretty extraordinary. And so I think you can imagine, as an investor, long-term care facilities, residential facilities, there's seems to be a perennial shortage of those facilities, nationwide. So I believe that's one area, certainly. But I also think that, personal AI assistant, that's something nearer term that I think is going to be rolling out as we live longer. I think we'll have access to personal AI assistants that will make us more productive, even if we are physically immobile, or maybe have a more difficult time getting around, and we're staying, we're sort of living as an octogenarian for another 20 years. That sort of limit of range and physical abilities. I believe that bodes well for personal interfaces with AI. I think we're seeing that already right now in healthcare with medical records, assistants helping physicians with their notoriously bad handwriting. And we have a lot of those sorts of technologies. And I would encourage people who are listening to this podcast, you think about the things you spend money on, particularly I'm thinking about baby boomers, Gen X, the older set. You think about spending $150 a month on cable bill. You realize how cheap it is to have an AI assistant with Perplexity or ChatGPT. You're spending $20-25 a month, and you're getting incredible productivity gains potentially. So I believe those are two areas I see right away as being impacted by longevity. Clearly, when you think it as an investor between public and privates, the private market is just vast and untapped. We have people to thank like Mike Milken and Mark for developing, entire class of assets in the high yield market, which is, of course, as he mentioned, fueled real assets, places like Las Vegas. You think about MCI, think about Craig McCaw Cellular, these huge industries that were facilitated by that sort of basically creating a new asset class. I believe there may be new asset classes that we haven't even thought about.
100%.
And I think a lot of it would be around the crypto space and blockchain potentially. So I'm excited as an investor to see what's going to happen down the road. I also believe that there are, you look at how the government, not just the US, but Western industrialized democracies have really overspent on welfare and have borrowed to the gills. And so I believe as private investors, the implications of that is we're going to have to step up more to do more with research that in investing in riskier asset classes that the government has been able to do for decades. A lot of it led by the defense industry and space industry. But I believe actors like Elon Musk have models for private industry stepping up. We've been doing that ourselves as FamilyOffice, trying to facilitate AI training programs for the military. Mark is doing that extensively now, and actually as a philanthropist, has some great ideas for how we as private families can step up and fill, in some ways, part of the gap. Foundations, obviously, 501c3 organizations have also been traditionally doing a lot of work in these higher risk type of research projects and endeavors. But there's no reason why we as private people working in private markets shouldn't also be taking the laboring oar and doing things that would otherwise be done by the government. That's what I've been doing with this. We've been doing, my partners and I, with the mental health services. That's traditionally an area that the government was heavily invested in up until the Reagan administration when they deinstitutionalized mental health. So those are areas where private families, I think, can step up. And hopefully Mark will talk a little bit about what he's doing with Toral and UCLA. But anyway, I think those are models as investors that are very interesting and that are emerging and that are that tie in sort of the macro trends, government spending, and technology.
And staying on the theme of healthcare, we'll transition to sports, macro, and other things shortly. And Mark, you could reposition my words as you see fit. Again, we're doing this very impromptu, but biotech breakthroughs. Think of, well, we had GLP-1s and the big pharmaceuticals. That's been a smashing success financially. There's things I could say that are currently underpricing the market, but will kind of redefine the next decade of human health. I could also go into the asymmetric upside of gene editing, of cellular reprogramming like Alto Labs or synthetic biology. There's just no question the world of healthcare converging with AI, the impact from genetics and biotech is creating, like David said, we'll probably have new sectors we're not even really thinking about. And this goes back to a big picture question on investing. If I'm a family office and I'm sitting on allocations the way I've had them for decade after decade, it does seem like it's a bit of a new world order.
Well, it's definitely a new world order. I don't know that there's a family that I talk to with, again, having the good fortune of a lot of friends who've had success that has a 60-40 model, or maybe even has a model. When you talk about private investing, a lot of your families, I think, and other families I see, want to invest privately in businesses they like or they know, or that they can continue to, run or either own for themselves or, have influence on. And they can afford to take a long, the real beauty of private investing is you don't have any exogenous or outside, influences, right? You can take a 10 to 15 year view. We talk about Toral, that was 10 years in development. Well, if you go back to when Dennis Slayman wanted to do it, my involvement's been 7 years. If you want to get into drug discovery, you have to be ready to start at 7 years. And we found a group of investors who were aligned in sort of having a mission that was larger than just finding a drug that, there's a binary outcome, as we know, in biotech. So if you find a drug, Dennis Slayman basically did all the research for the drug Herceptin that now is somewhere between 75 billion and 100 billion of global sales. Number one selling drug in breast cancer. He's up for every award you could have, Lasker Prize, and otherwise. I think Nobel's the last one. And in the meantime, when you look at that, the university got very little from that. I don't think he got anything. And, large pharma made the money. So families can decide that they're going to get involved and to make an impact. And the impact isn't just, this notion of, doing well by doing good, but actually giving a company the runway so that as a drug develops, as we've had with Claudin-6, you don't have to, the first time you have an interest from a large pharma, you say, gee, we've just got this going. We can sell this now. Let's sell it now. Because the challenge is when you sell it now, you lose control over the development of the drug. And if you're committed to getting drugs to patients and curing them, a team that's been together for decades, that has real life, we don't need AI to generate our models. We have decades of real patient data on how patients will respond to therapeutics. And so that, you just back that person and have patience. Interestingly, the group I put together, is open to investing from, a pre-money of 50 to pre-money of $1 billion. All good, and just as followed on. That's very stable and gives a management team the ability to, do what to fulfill their mission, if the mission is to get drugs to patients. So I think family offices can decide, what they're in it for. Are they in it for a return, and for what piece of their portfolio? 60-40 doesn't, begin to cut it. ETFs now do allow you to make tactical decisions. You don't need a money manager. You don't need a hedge fund. I talked to a couple of high-profile hedge fund people that everyone in your community knows probably is invested with both. They feel that AI is they've got this major trading advantage because of the analytics they have and how they can trade their portfolios and identify things. This is going to become commoditized. And
Yes.
It's going to, and so everyone's going to, if you choose to, is going to have the benefit of that. What I find is interesting, Angela, especially for what you're doing, is you're creating a community of like-minded people who can then share this. I forget how many folks are in, you touch a lot of families, right? And they can share ideas and thoughts. And 60-40 is, I have, I shouldn't, this will guarantee that this goes wrong, but we really, our family doesn't have any money in treasuries. And when we had the market corrected last time, I'll take a little bit of a different point of view from David. For a long time, I was, for digital, more interested in applications. We were an early investor in Coinbase in our family. I just went and bought Bitcoin when it was at 76,000. I never imagined I would buy. It was easy to buy it at 20,000. And then before, I never imagined I'd be buying it then, but it was more stable than the stock market. Imagine that. So I think, and I think most of the people who don't like Bitcoin, we all know who they are. I think they're talking their own book, where it doesn't work for them to have that as a stable asset class. Well, all of a sudden, BlackRock likes Bitcoin because they got a big ETF.
What a surprise!
Which, by the way, I guess
now Larry thinks to get mad and never come on.
That's but with all this, when I wanted to go on the market day and buy something, we just bought their ETF. It was really easy. You have to think about a coin. You have to think about somebody, breaching your account. And so the one thing I want to just put into the discussion, and the Milken Institute had done work that we just had a granddaughter. Her average life expectancy is supposed to be 121 years now, based on their analysis.
Yes.
But you have to wonder, as the life expectancy in the world has otherwise come down, if what's happening with viruses and pandemics and things like that, and also birth rates. Elon Musk talks a lot about birth rates, and certainly how he runs his personal life. And in a lot of countries, that's a real concern that the birth rate's coming down.
Elon's having no problem producing children, Mark. He's going to make up apparently for all of us. And on a little more serious note to that, and this will take 15, 20 years to really play out, robotics, but maybe we'll save that one for a little bit later. And again, we're doing this impromptu, everyone. This popped in my head. AI is making moats disappear. A lot of public companies that we think are stalwarts, we just don't know what the next 1 year, 5 years, 10 years is going to look like. Look at the Fortune 10 or 20 from 10 years ago, 20 years ago, 30 years ago. Only Microsoft, going back that far, has really been consistent. And effectively what I'm saying is I agree, public companies, they're liquid. There's lots of information on them. I could get in and out. That can be a negative, by the way. Maybe I get out too quickly. What I'm getting to is with AI, moats disappearing, we're under the assumption that long-term public equities are always going to be great. And yeah, if I go in a block of 20, 50, 100 years, bravo, that's probably true. Now, short-term, I may have to deal with volatility, but I like to think like a contrarian. Just because it's been that way doesn't mean that this time really isn't different, because it feels different. How do I understand the fact that my public company portfolio may be decimated or not go up? Why do I assume it's always going to go up? The next 5 or 10 years could be very challenging.
Yeah, well, I think, we had an investment conference at Crescent once, and that was our title. It's different this time because, and there are a lot of macro factors. I know at Davos this year, I think the consensus was 4% growth in equities. At that, that is an underwhelming show of support for equities. And it's easy. It's sort of conventional. Like I think myself, we have a small position in our family in NVIDIA. Well, whatever's trading it now will be higher in 5 years. Well, who knows, right? Mm-hmm. The corollary to that is when you mark to market, you have reality check. Whereas, we can all convince ourselves with our private portfolios. Owners tend to, there's always a bid and ask price. So owners tend to like things that they own more than others do, value more. If you sell a house, you think it's worth more than most buyers do. They did one of these studies, I forget which book I read, but you have Duke students, they get tickets to the NCAAs. The kids who win the lottery say, what would you sell for? Like $1,000. I mean, I want to go. I got this ticket because they just think they were lucky. And then you ask the kid who's going to buy it, well, if I go to the bar, I can watch it on the screen and have some friends, that's only going to cost me $100. So maybe $200. So there's always a wide range. So you could have an easier day-to-day life being invested in privates. 75% of our assets at Crescent are private. Most of our family investments are private. So I haven't had I've saved from sleepless nights. I've probably added longevity for that. But whether that's the way to organize the portfolio, I guess remains to be seen. It's certainly more fun to be invested in private things where you feel you can have influence. Although I have a friend who was a college roommate, worked at a big hedge fund. He loves getting his statements. He loves his stocks and his bonds. And by the way, he's not buying treasuries, I don't think. So it's one of my old friends used to tell me, he's passed away, since everybody gets to do what they want to do with their money. I think he said that somewhat sarcastically when I bought a baseball team. And it's a non-correlated asset. It still is. I never imagined, on a mark-to-market basis that the equity's up 20 times.
And it's somewhat of an unfair question to both of you, since you're both more active in private markets. But me being a little knuckleheaded, I'm going to ask it anyway. You could punt on it. It's okay. If you had to pick, and maybe you indirectly hinted at it, Mark, with NVIDIA, if you had to pick one public company, my audience seems to like when I do this, that for the next 5 years, it may not go up, whatever, 5x, but probably the tailwind, it's going, or the headwind is behind it. Is there any company, Meta, NVIDIA, Nestle, it could be anything, that stands out to you as probably a good holding?
Is that for me or for Mark?
It could be for either of you, or you could punt it.
I mean, I think if you have to pick among the big tech businesses, it looks like, my crystal ball is Meta and Google are probably ultimately going to want to getting broken up. And I think that will bode well for the next tier of technology companies. I think it'll spur as much or more innovation, maybe, or I should say actually a lot more innovation. It'd be a good thing for the economy. I wouldn't normally say that because I tend to be a little more libertarian and I don't want the government telling us what to do. But I do think in this case, if we assume that will happen, I think there'll be a lot of innovation, much like we saw when we broke up the Bell phone system in, when was that, the 80s? So I believe that next tier is probably an interesting place to be invested as a public market participant. NVIDIA has been, the darling, obviously, of technology and public markets. It's interesting that when you step back and take a macro view of that a gaming chip that wasn't even designed for AI is powering 75% of the AI globally now. It's a strange thing to think. So what happens? Who's going to ultimately win that? Is going to be whoever pivots and creates the very best AI chips that are designed for AI. And I believe they're well on their way to achieving that goal. So that would be my pick.
Yeah, I would have. For us, I like growth, but to preserve wealth. So I still look at companies like, although we have NVIDIA, companies like Apple and Google, Meta. Berkshire is tough because Warren's age now, and I was on a school board with Charlie Munger, was on the Harvard Westlake board for 59 years. So I had the privilege of working with him on that for 18 of them or so. And so for me, it's easy to just buy a QQQ, buy an ETF for the NASDAQ and buy Berkshire and call it a day. And then
you're probably going to beat 90% of active managers long term.
But
in the past, we don't know about moving forward.
Charlie used to tell me that folks like me, we're all, nobody can beat the S&P, of course, he and Warren, but we're all just basically marketers because you can't beat the index. Otherwise, I do think David's approach is right. Trying to find that, if you're looking for trying to get to the next, the next new thing, whether it's, the next chip manufacturer or the next industry that's going to benefit from AI. That was more interesting to me generally anyway, rather than trying to decide who the winner was with all the, for putting all the infrastructure in place, who's going to be the winner in their ability to use AI. And, I probably, but our family doesn't do that. We're more interested in private investing.
And
I think if I could add on real quickly what Mark said, I think it's exactly right. And I think that's part of the reason why at the beginning of the conversation, I was noting the fact that Mark and I are investing in healthcare where it meets AI, because I believe, AI will there's a real arbitrage even today where AI meets healthcare, because there being so many companies that are laggards in technology and healthcare, a little bit like the real estate industry. The real estate industry is traditionally very slow to adapt to technological change. Healthcare has been the same way. So I believe, to Mark's point on sectors, picking sectors, if you're excited about AI and you want to participate, businesses that are enabling healthcare providers to become AI enabled, I think that's a very interesting sector.
Yeah, and to overlay on this community approach I'm trying to take, what we're trying to do with Stand Up, and David and I reconnected, is, he's got diagnostics with breath. If you get diagnostics with, saliva, blood, urine, and then overlay AI on that, maybe you can come up with a better answer. And then to make the investment from like a Stand Up standpoint, instead of just sending research dollars in, which you can do, you have an investment in each of the companies and you tie them together somehow, even if it's through a joint venture, the charity can benefit and then continue to be self-sustaining, as opposed to, having to raise, money every year to do good.
Of course. Does that make sense? What Mark just said in very brief 15 seconds is pretty profound, which is that, at least where he and I are investing our dollars is, if we can aggregate data from different sorts of diagnostic companies that are cutting edge diagnostics, by the way, not traditional testing, but really traditional, but really leapfrogging traditional blood testing and finding companies that have enormous data from biomarkers. So our breath test company is testing 3,000 biomarkers as opposed to a couple of hundred with most of the blood testing businesses. But if we can get these cutting edge technology devices and aggregate the data from those inputs, these effectively on-ramps for the data. We take our AI personnel, these people that we've been backing, and I think we get a much better result at the end of the day that can be very predictive at the end of the day. Not just catching early stages of disease, but then maybe predicting, hey, you're likely to have ovarian cancer in the next 5-10 years. That's really where we ultimately want to get with this technology and what it will ultimately do. And then the other thing he touched on, which I think is really interesting and part of what I'm excited about, is traditional organizations that are, cancer advocacy group like Stand Up to Cancer, these charitable organizations. They have to come up with new ways. A lot of these models just aren't sustainable if you have to fundraise perpetually. And what happens when that leader dies? Does the organization suffer? Yes, it does. So trying to come up with new models for how what would otherwise be purely philanthropic endeavors, whereby private sector or private type models can make those organizations more sustainable to the extent they can participate in for-profit making sort of projects within their advocacy area. So for instance, an early detection of cancer for Stand Up to Cancer, instead of just spending money on things that are basically have no return and sort of a black hole of funding, you fund into sort of a private venture that is also achieving, very significant progress in early detection. So I think that's really profound what Mark just said.
Well, thanks, David. And we're trying to get a portfolio effect here, which we actually have without going into the detail on what we did at Toro. And you have a portfolio effect here with a number of companies we can put together for this. Separately, when you're investing in any of these projects, you've got Stand Up as sort of the, trusted party, right? Not that I think David's background and intellect and pedigree speaks for itself, but along with that and the others who are equally trusted, we have a major cancer hospital involved. You have this organization that everybody trusts. Likewise at UCLA, you go in with the imprimatur of that organization, over 20 scientists who work together. Instead of having one person who has an idea in a little lab, you have 20 scientists who work together for decades, and you figure out how it works and is sustainable for the scientists and the university and the investors, so that all the interests are aligned. And that'll be the challenge for the next project, and that David and I are working on.
Okay, if I can add one other thing, because we touched on Mike Milken, I think, and this maybe ties together the community effect in family offices, is you look at what Mike did with prostate cancer. So he basically went in there and he tore down all these traditional walls and these silos. All these different researchers are working separately and recreating the wheel multiple times, different places around the world. He said, forget about it. Let's get everyone together and coordinate. That's enormously impactful for driving innovation and discovery. And you consolidate all those efforts and focus them in, as Mark's been doing also with these different researchers in UCLA. You bring all these people together, you can have a much better result in the end. So I think that's part of what we get excited about when you think about the community you've curated, Angelo. The potential you have with that network you have is to marry long-term focused families that are focusing maybe a little more on private markets and have that long-term patient capital. It's really the very best form of capital. It's better than venture. Venture money is great, but the venture investors, like any other private equity firm, are very focused on the fundraising cycle, which may not always match up to what's best for the business cycle and when to sell a business. So families have that luxury to determine and to hang in there for longer. And I think it's ultimately the very best possible match for achieving breakthroughs longer term in healthcare and technology innovation, is having long-term patient capital involved. And a network effect like what you've created, Angelo. Bringing that network together on projects like what we're working on, I think is sort of match made in heaven.
And I just overlay, and we're both talking over you, Angelo. I apologize for that.
It's
Mike
okay.
has new ideas for decades. Started with CapCure, then PC. I've had 21 every year. We have them in our ballpark to raise awareness. It's not just raising capital. UCLA and Caltech. I talked a lot about Toral. There's a joint venture we have in drug discovery with small molecules with Caltech. Those two universities were open to new ideas and structures. They weren't. A lot of tech transfer groups around the country are just very, they're in a box. They have to stay within the box for whatever reason, and that's it. They were open to new ideas. A lot of the things you've raised today, Angela, you have to be open to new ideas. And if you're not, which is okay, could be that you don't want to take the risk, to be that you just want to, play golf or sit on the beach. But if you're
Sounds
thinking
pretty
about,
good.
I know. I have a friend who does that, and I'm thinking like, what am I doing? But we can, and the great thing about the group you pulled together is, given the net worth, you don't create the net worth your families do, whether where the generation is, without somebody having new ideas and being open to it. And those will be what drives it, especially as the governments, for I think primarily the reasons David says, whether you have a president who's actively pursuing it or not, we can't keep living on borrowing in the future. So more and more expenses or things like this are going to have to come from private sources, and I think you can also build things and have a lot of gratification, by investing in things privately, and not worry about whether you would have done better in Meta or not than, in some of the things we're talking about.
Oh, that's tremendous, David and Mark. And yes, my members and audience could reach out to me for a little bit of a conduit relative to what Mark and David are doing privately. I'm still going to weave in a couple of quick sports questions. Then we'll end with a macro question and call it a day. And by the way, if you're a single family office, particularly a member joining my SFO continuity, and you're going to be in LA in and around Milken and have a chance to potentially even meet David and Mark, I'll let you know how you can do that. You just have to reach out to me. And again, that's a little more applicable to my members, but maybe you'll catch me in a soft moment if you're a family office. So again, May 4th through 7th, 8th, I'm going to be around. It's their backyard. I'm going to be doing multiple different programs focused on my members and a chance to interact. And by the way, if you want to meet people like this personally, like I'm describing, get proprietary intellect and the value that I'm doing around the world as a family or an SFO, you got to go to angelorobles.com, become a member, and join. It really is that simple. And this is the kind of value, more so in person, that you're going to get. So go ahead and do that. Mark, I'm going to ask a question. Boy, this is really challenging me here. I'm going to combine manufacturing, Trump, and tariffs and sports in one question. Here it goes.
You may need AI to put that question together.
I am being tested on this one. How have effectively Trump and tariffs impacted long-term, which is 4 years from now, or actually closer to 3, logistical and economic planning for the 2028 Olympics in Los Angeles? Is reshoring going to be happening, the impact on the world in the US, or is this all a cluster you-know-what or PR spin?
Well, putting on an Olympic, I found, and some of the benefits of being in Los Angeles is we're so spread out, is also some of the challenges. We've had the benefit because we were designated, with an 8-year runway and not 4. And I think which has helped in this case. An enormous amount of work gets done the last 6 to 12 months before the games, and so it's sort of ducking the question because we don't know. We do know that the could move $1 billion at the high end in either direction, which is worrisome because we budget to break even. We'd have an enormously successful Olympics for the city if we had a surplus. We are very actively making sure that we can control costs, especially right now, so that we don't end up in that other area. And I there is no remember Commissioner Steele, when Bud Steele was a commissioner, he once told me
Sure.
on the project, failure is not an option. So for Casey Wasserman in our group, failure is not an option. The good news here, the president was very helpful in us getting the Olympics, because we secured this during his first term. So, and this is a great thing for America. And so I think when I talk about alignment of interest, we have a lot of alignment in having a success here. And and we've got, we're building a whole, you have to actually build, to talk about cost, you have to build a whole communications center that you literally build and then take down.
Yeah.
It's quite expensive to house, the hundreds of, media that come in. We got some sponsorship for that. We think we have some, alternative use afterward, but a lot of it just, is temporary. And so it's quite a challenge. We actually have a former general who's leading the charge as the CEO. That's probably a good choice as someone to run it.
And Mark, I'm going to maybe ask some quick round robin questions on sports and baseball. Let me see if I could organize my thought around this. Prominent owner Mark Cuban sold, I guess, the majority stake in the Dallas Mavericks about a year ago to the Adelson family, obviously, as you would know, in Las Vegas. My thinking is, there's only, 32 of them in the world. Why is he doing this? He's prominent at it. I guess he's good at it. They won a championship, in 2012. He's doing it because either it got a little old, but it's something historically that has gone up in value. However, why would I be liquidating $4 or $5 billion? In my mind, because I think investing all the time, he must think there's something better to allocate that $4 or $5 billion to moving forward in the next 10 years. How do you think about your ownership in the Brewers? There's only a limited number of them. And do you understand his thinking that there may be a better opportunity that could get a better return on your capital?
It's interesting. I knew Mark back to when he was looking at some baseball clubs in the 2008 type timeframe. And he's extremely thoughtful and seems to have very good timing on things.
Yes.
I'll just take a little detour in answering that. When we first managed, we were we were on the advisory side at Drexel. Even if I was working for Mike in capital markets, we were talking to bond buyers and talking to issuers, and maybe trading therefore. But we got when we went into money management Crescent, we had a high yield portfolio. We had I guess, $100 million, 20 names, a bunch of defaults, whatever. We're all set to make our first sale. And then we started to think, well, what do they know? Why are they buying? Every time there's a market, there's a buyer or a seller.
Yes.
And, so for Mark, obviously, which I know is not the question, I'm sure there are multiple layers of reasoning. For us, it's a generational asset. It's set up for my kids who are both passionately involved with it. And one went to Brown, one went to MIT. So hopefully they have the intellectual capability, but you also have the emotional and understand you're a steward for a community. Ultimately, it's the community's team. It's not your team. And so I've been mentoring them in ownership and how to be stewards. So for us, and you can't replace it, and you can't replace the experience and what it means. Opening day, we have 40 family members generally who come out, extended family for opening day. I once said to a friend, well, and some of us, I have a sort of a distant friend who was pushed off a board at the age of 77 in a company he was identified with, and then had some depression because his whole identity was that company. So, I said, well, if we sell the club, if we have something different to do that we want to do that's different, I sell Crescent, sell the club, sell everything, just another rich person. How many folks are in your community, by the way, an extended community?
Well, my SFO continuity is 50, marching up to 100. My broad database of relationships with single family offices is about 3,000.
Yeah. So there's 3,000 of people who probably just like us, and they all have identities and ways they identify their families. So for us, it's a big part of our family identity. We're quite ingrained in the community, so we're dug in for the long term. And from time to time, we add new investors. We added Giannis, who plays for the Bucks.
Of course.
We added the Stayer family, who own the Johnsonville Sausage. They're our sponsors. People know them mostly because the sausages run around.
Yes, I know. I have been there.
Racing sausages. It's also, I think, the largest sausage manufacturer in the world. And by the way, you think about, well, gee, life's good for the largest sausage maker in the world. When they bring in beef from Canada, it gets taxed, and when they sell the sausages back to Canada, it gets taxed. Just saying. And so we look always for like-minded folks who can add to the partnership and
now,
to everybody's enjoyment.
Mark, you could punt on this one. It's tongue-in-cheek. I happen to be, of course, an Italian from New York, a New York Yankees fan. I have been since I was a kid. That goes back a long time too, Mark, sadly. My question is, I mean, come on, we make a trade with you guys. We get the greatest reliever in the game, and I don't know. It's only been a month. But you guys might have got the better of that one.
Well, I'll say two things. I grew up in an Italian neighborhood in the Bronx. I grew up in Pelham Bay. A few subway stops away from the stadium and
yes,
near Arthur Avenue. The guy you traded to us, Nestor Cortez, he's on the IL for 60 days. The same elbow that was barking for the Yankees.
Yes, in the playoffs. Yeah.
Barking for us. This is baseball trades, and I think Devin Williams. Relievers like that, they in the baseball analytics terms, they are high variance. But he's had so much continued success, you'd completely believe that once his changeup does not have the vertical movement that it has historically, and he will figure that out. And I think Aaron Boone has him figuring it out in lower leverage situations now, and he will be a weapon. It's a special team like the Yankees. I don't want to jinx anything because I'm still, as Hal Steinbrenner and Randy Levine know, I'm still a Yankee fan. So they invite me to playoff games if we're out. I went to the World Series last year, but he'll be a weapon for them at the end of the year, I believe.
And kind of a serious question relative to even an organization like yours. So, and again, my math may be a little off here, but the NFL is accepting some level of ownership from private equity or quote unquote professional investment firms. That percentage will increase. Come on, let's face it. Other major sports are going to follow. Are we getting to a point, unlike your 21, 22 years ago, where honestly, just do the math, maybe more so in the NFL, but do the math. A multi-billionaire is really not going to be able to buy, maybe outside of hockey, a professional sports team. There might be exceptions, the Jacksonville Jaguars and other teams that are not quite as popular in their sport. What I'm basically getting to is the valuation of teams is going to start to be, at least for the Yankees or Cowboys, 10 billion. Then it'll be 15, then 20. Are we getting to a point when only the top 20 wealthiest people in the world or organizations and corporations are going to own sports teams?
I think a little of both. Actually baseball was somewhat of a front runner in looking to have funds be able to invest in teams. The NFL, for a number of reasons, maybe was later to the party, but then, more demonstrably putting out what the rules are. One of the ways that sports leagues are addressing this is, by minimum ownership. So in baseball, it's 15%. So if it's, a $3 billion valuation, to control it, you need 450. That's not, that's a lot of money still. If you're looking at how you're diversifying your assets. There's different ways you can structure. What's interesting to me is the amount of, maybe this is just disposable, wealth. Folks are going to write 9-figure checks to just say that they're an owner of a team. And one of the reasons they're willing to do that now is there's a lot more liquidity in the system than there used to be with, firms like Arctos and others getting involved. So there's more liquidity. But yeah, there'll be a paradigm shift. I still think that the passion that families bring makes a difference in ownership. Certainly, if you look at our metrics, whether they're business or baseball, they're the top decile. If you calibrate it, and sports has been. So we think that staying involved, and I'm not worried about competing with companies, I guess is what I'm saying. and nameless, faceless companies have historically not been good, successful. They may at running things. Look at the difference the Dodgers had from Fox, then through McCourts to now Mark Walters Group. You can't compare the Fox, and no knock on Fox. Disney owned the Angels. Maybe in the future the Braves are actually Liberty's sort of separating, but that doesn't mean in the future that for everything you said before that's not an absolute. And
that is true.
And it still feels to me like it's an uncorrelated asset class. And when I first to convince my wife that I wasn't going to bankrupt us, she was in this very study, Debbie, and said, "You're not going to lose all our money, are you?" So it had the Bank of America, who helped back me back then in 2004. They did I said, "Here's this asset correlation study. It's this is a good diversifier for our family." She knew that was completely made up. I wanted to own a baseball team, but from all the metrics I can see, and there's a lot of macro things we can show you. Sports is an uncorrelated asset class and growing. If you want to take a broad view, $3 trillion in size. So who would have ever imagined sports was an asset class in that size? There's ETFs now, as you know, Morgan Stanley, I think, and others are coming out with sports ETFs.
Yes, indeed. And maybe in the future, I'd like to actually do a interview where we could focus on that. 2 questions I'm going to leave on the cutting room floor, but to whet appetites in the future would be effectively roster depreciation allowance and the impact on long-term strategy in sports. And the other will be capital calls for minority owners and MLB franchises. Why don't we save those for the future? I want to ask David a question, going back a little bit to the big picture of the impact of AI. And we spoke about healthcare, David. The other areas that are impactful of that is it needs energy. So not only, I could argue nuclear, I could argue drill, baby, drill, and those are going to be inevitable, likely, if we're going to be competitive with China. But I also look at critical metals. I look at rare earths. I look at how China has a massive advantage in processing and not the regulatory and guardrails that we do. And I know I'm weaving in a little bit of macro and Trump in that one too. So what is your big picture perspective as a family office allocator in energy and critical minerals / metals / rare earth?
I guess I got a little bit involved with this space during the first Trump administration. We had my colleagues, my old friends at Carlyle Group, and Glenn Youngkin, who's now governor of Virginia. He was back then still running Carlyle. He and I knew each other from business school and started around the same time. I got a call from Carlyle saying, we have some people over in Africa that are high-placed political leaders that need some help. And they asked us if we could help them organize trade delegations and create a closer tie between the US and some of these rare earth metal producing nations like the DRC. And they got a call and they said, that's not something we can do at Carlyle, but we have an alum who likes to dabble in these kind of unusual projects named David Robb. So why don't you call him? So I got a call from the central bank president of the DRC, who told me that with Shisekedi and the new administration there, they are dying to kick China out because China has been paying all the judges off and corrupting the whole the institution there, the government and the different branches of the government. And I know that's maybe a controversial thing to say, but this is what I was hearing, and that they really were encouraging Americans to come over and develop the rare earths. So I got kind of involved in that. We ultimately decided not to do the deal because the other issue you have in a lot of these countries where there are rare earth deposits is that you tend to not have the legal infrastructure there to make good deals. And then you have, even worse, you have an overlay. So you don't have rule of law necessarily that we have here in the US. And then the other issue you run into, I think, some of these countries is you have just outright corruption, and people have become so used to getting paid off. And as Americans, obviously, we can't participate because of the Foreign Corrupt Practices Act, any of that. But our friends over in Europe and friends in China, they don't have those same restrictions. So we really are operating as Americans with our hands tied behind our back in terms of going overseas, at least I should say as private families and private investors, going overseas and speculating in a lot of those metals, because combination of lack of rule of law, ability to engage in a enforceable contract that can be enforced in a court, that the way we enjoy in the US, we don't have over there. And then you have the corruption piece of it too. It makes it very difficult. So I wound up withdrawing from all of that because of those issues. So that is a problem for sure. I think kudos to Trump, because it looks like they just got or about ready to sign this rare earth minerals deal with the Ukraine. I think that's very smart for this administration. And I think it really is going to take government leadership, American government leadership, to be able to overcome some of these issues we have as private investors in that space.
Angela, I've mentioned that I've been looking at a rare earth opportunity, private, centric to the Midwest. And it's very interesting. And if, again, as a family, you can look over a period of years, but the transportation cost has been a hitch, even if they're, US based rare earth minerals. And then every time someone comes up with something, China has collapsed the prices to make it a money loser. So you have to get around their somewhat monopoly type hold on pricing. But for all the reasons that David said, it's interesting, and I think it's great that the president is focused on it for the bigger picture and what it would mean for our defense industry and other critical pieces of our country.
And my last question. Sorry, I took longer than normal, guys, but
longer
than normal than expected for you guys. For me, I like 3-hour interviews.
You can go on as long as you want, Angelo, because you dig way deeper than anyone else in the space.
I know. This is great.
Yeah. Oh, well, thank you. This is an advantage over many in-person events, is we're not limited to 20, 25, or 30 minutes. Relative to that question, this is going to get a little political. You guys can be careful how you answer it. It's okay. By the way, the fact that the EMF allows China to demand that they're not considered a developed country, but an emerging market, and the advantages they get from that is ridiculous. And Trump, to call them out on that, is 100% correct. The man is uncouth. He should not be calling people watermelon head and Pocahontas. I get it. It's not professional. It doesn't give the vibes that we got with Obama. But you have to look, sadly, a little bit beyond that and look at the policies. So broadly, my question is going to be around the area of other countries we have unfair trading imbalances. It's about time these were looked at. Maybe Trump is trying to play 4D chess, Liberation Day, the tariffs. It appears to be a little chaotic. There appears to be some dissent from Elon to Besant. So I get it. There's things to be concerned about. It is chaotic. But sometimes to change a paradigm and change something that is so entrenched and so bureaucratic, you got to do something where we may not know the outcome. God forbid Americans have a short attention span. Could you give this a couple of months to a year? Could we see this play out to the midterms? And then I admit, if it's not working and we don't have favorable deals in place, that's going to be very, very disappointing. I have my concerns, but I look at what the alternative was going to be. Taxing unrealized capital gains, price controls, limiting my ability for free speech if I believe in certain things, limiting AI because the government wanted to control it, canceling people or cancel culture. I know I made this a little political. I didn't mean to, but we have two interesting people on that maybe can't let it rip the way that I could, but could give their perspectives, which could be totally different than mine. And I'm okay with that because I want to learn. So I'm going to start with Mark, then we'll wrap up with you, David. Do you have, and again, if you want to basically say, Angelo, it's hot football, I'm going to leave it alone, your call. But any opinion about that, Mark, or adding to it?
Well, I think the pendulum always ultimately swings too far in one direction, and so it clearly swung too far in a direction. And a lot of the things that the president touched on, and the administration, how about as simple as what other country taxes its citizens to send money out of the country? And start with that. I think that was asked rhetorically, but I haven't heard the answer as to what other country does that. And so there's a situation that it needs to be addressed. Most moderates, without putting it within red state, blue state, most moderate people that I speak to understand the need to address all these things and maybe question the execution or the speed of the execution.
True.
And so there's that issue. That I think it was Howard Lutnick made the point that, well, the president's had success in his career in creating chaos, and then benefiting from being comfortable in that environment to negotiate. And what I've said, and so far, and I think by the way, a number of Jamie Dimon said, the conference like 4 or 6 weeks. So we're not going to know any of this. We hoped we'd know by the end of June, end of the second quarter. That gets to your comment about Americans being impatient. What worries me about all of this is, the Americans are instant gratification, and we're consumers, and the Asians and the Chinese in particular know how to tighten their belts and run an austerity program, and they're ready to do it for years. I mean, if the citizens aren't ready, the government will enforce that. So, I worry about our negotiating leverage in all of this. And I think, the markets, I'm not really in equity markets student, but, where things have sort of, I think, as of this morning, equity markets got right back to parity where things were when the tariffs were announced on, what was it, April 2nd or whatever. So I think the markets have adjusted, thinking like, okay, let's just see where this goes, rather than taking an extreme point of view on either side.
Makes a lot of sense, Mark. And David, I'll give you the final word on that.
Yeah, I'm happy to participate in that. I something really interesting. You think about the analogies as a public market CEO. They're often faced with this, enormous pressure to continue to grow quarterly earnings, and decisions that are made that have a profound long-term positive impact on earnings are often not rewarded by the market short term. And we all know that as investors. I think the same thing is playing out. That's really analogous to what's going on with tariffs. This is not a 1 or 2 move on the chessboard exercise for the Trump White House and for the other countries on the other side of the table on these tariff negotiations. I think this is a 4 or 5, 6 chess move sort of exercise. I don't think it plays out by June. I think this is going to take us 12 months to 18 months for a lot of this.
I agree.
Works out. And unfortunately, the public markets don't, and they don't like
no patience for that at all.
So that's why I wasn't surprised to see the kind of market reaction we did. I think you're right, Angelo, that these are necessary moves to make. We've been ripped off for a long time as a country. And that's not just based on emotion. I heard Wilbur Ross at a lunch I had with him in January in New York. He said that when he was Commerce Secretary, he was on one of his last junkets over in Europe. He asked for a show of hands in a room full of the top finance and commerce ministers from around Europe. He said, can people, a show of hands, anyone thinks that they have an unfair trade deal with the US? He said only 2 hands of 100 went up. And then he went beyond. He said, am I fair to assume that the rest of the room feels like they have a pretty decent trade deal with the US? And everyone basically said yes. And so he said at that moment, the light bulb went on that this really isn't sustainable and that something needs to be done about it. So kudos to him for pushing on that, and for Trump to pushing on. I think, it's going to be painful. It's going to continue to have surprises with this chess move that they're going to be going down the road, particularly China. To Mark's point, I don't know what kind of leverage we really ultimately have when you're dealing with an authoritarian power that's able to execute like a Swiss watch on its 5-year plan. I was an investor over in China. I owned coal mines in Xinjiang province of China. After I left Carlisle, I was doing some investing over there, and they have this 5-year plan to execute like clockwork. And if they want to move a dam or they want to build a dam, they have to flood a city of 100,000 people. Guess what? There's no law.
They don't give a damn.
They don't give a damn. They will vacate that entire city and they will put the dam up. So just like they have that kind of authoritarian power that Mark referred to, that's a huge competitive advantage as a nation state competing against the US, where we have all these competing interests, and a public that might have a shorter term view, just much like the public markets have a short term view on things when CEOs want to take a hit in short term for a long term gain for the earnings. I think similar, we're in that same situation. It's a very difficult needle to thread for this White House, but I think the payoff will be enormous for us longer term. I also think, looking at healthcare, we have the same thing going on. You have RFK, who's creating waves, but I think if he is successful in only a couple of the initiatives around cleaning up the food supply, banning what he did with these petroleum-based dyes, these sorts of things that are maybe cause a little concern shorter term, will pay off for dividends for decades in the overall health of this country. So I like the long-term orientation. I just hope that, to Mark's point, politically, the public has the patience to let these things play out, because I think they're very important decisions they're making for the benefit long-term.
It's going to be very, very hard. And the fact that China manufactures so much and we don't, how, God forbid, we talk about a kinetic war going from cold to hot, like, it would not play out well for the US. You just have to be realistic and honest. We do need to make adaptations. They're not going to happen overnight. Although the fact that Elon built the largest data center in the world in a couple of months under the Biden administration last spring and summer, incredible. So theoretically, we could do it. I just don't know if we have the fortitude for short-term discomfort, including in our stock market, including me. I'm impacted too. And I'm not saying that every idea is perfect and that the execution of it has been incredible. It's been somewhat chaotic, of course. Yeah. And we're going to see how it plays out. But longer term, the perspective of what I described with our trading deals with countries, it's horrific how it's been. Something needs to be done. And gentlemen, we don't have the time, but we have a $37 trillion debt. Like, that's, I don't now, yeah, we're the world reserve currency for now. Maybe AI and robotics will have a massive impact on GDP and things to play out in the coming years. I could be optimistic, but I don't see how there's not going to be more money printing adding to the problem. But why don't we save a little bit of that macro stuff maybe for my trip to LA? Audience, thank you all, both live, well, not live, what am I talking about, but recorded. For those of you that watch this, if you're around LA, May 4th through 7th or 8th, reach out to me and let me know. And David, maybe you acting as the conduit, if you want, for Mark, for those who are family offices and real investors that would like to learn more about some of the private opportunities that you're describing, how could they reach out to you?
Yeah, I think thank you for offering that, because I believe that, I never go it alone on investments, and Mark doesn't really either. We like to go with others. So in the theory that multiple heads are better than one, we don't own a monopoly on good ideas. We do like the idea of meeting up with other family offices and coordinating and helping each other on these different investments. So if people do want to reach out to Mark, feel free to reach me on email. It's my first letter, my first name, David, D, then the last name, ROBB, number 2 @gmail.com. That's a really easy way to get me, drob2 @gmail.com.
And any of you could also reach out to me, especially as a member. Happy to make an introduction. These are the kind of people as a member you would meet. Go to angelorobles.com, go to membership and join, be a part of my SFO continuity. Before I wrap up, and I'm going to say this on behalf of David and Mark, one, thank you all, but I would like to make a little comment. This is all from our personal perspectives. Personally, David, personally, Angelo, personally, Mark, not representing any company or company that we own or represent. It's a personal opinion, which can be wrong at the given moment, meaning new conditions come in, like playing poker, our ideas may change. When you invest, there's something that could happen. We never like to talk about it. You could lose money. Only invest what you're capable of, to your capability of your experiences, and everyone has different needs for liquidity and for a variety of different goals and purposes. Understand when you invest, again, I'm going to say it one more time, you can lose money. Think for yourself, do your own diligence, and make your own decisions. Gentlemen, thank you all so much for being a part of it. Look forward to seeing you, David, I guess on Sunday. You and Mark on, I believe I have it as Wednesday morning. We're doing an AI session in the beautiful Mayborn in Beverly Hills, a great hotel. Looking forward to that. Those of you can reach out to me at angelorobles.com. And actually, I'm not afraid. I just have one phone. I may change that in a couple of weeks, but you could also text me. And members have complete access to me. They could text me 24/7. 203-570-2898. And again, if you're not a member, go to angelorobles.com and go to membership and join today. Everyone, thank you all so much. And again, David and Mark, appreciate it. See you both in LA. Thank you.
Thank
My
you.
pleasure. Bye-bye.
Bye.